So welcome everyone. Going to convene this meeting of a special working group pursuant to House Bill 6888 of the 2023 session. And it is a working group to discuss access to financing for mobile manufactured homes. I am State Rep Jason Doucette, the House Chair of the Banks Committee. The bill I just mentioned originated in the Banks Committee. It was proposed by Representative Santiago, who has also joined us today, who will introduce in a bit as we go through members of the working group. This working group, this is our first initial meeting of the working group. Like many working groups or task forces, sometimes it takes a while to make sure all of the appointments are made in due time, and to find time to convene a meeting during busy times or even not so busy times. It's always a challenge with these things. But I'm really pleased that everyone was able to join us today here. We've got really an all-star panel, I think, of folks in the know in Connecticut about the housing market and financing of homes. So I think we've got a great talented team here, and I hope to have a few productive sessions of this working group. As a working group, I think this is a fairly informal endeavor. It's just a chance to have a discussion and see if there might be some ideas that can be generated, and really also to share some information, some data about what's happening in the market regarding the financing of mobile manufactured homes. And really, I mean, the guiding language of the enabling legislation here, which I will read from, it's just very simple, one sentence. It says, it's establishing a working group to study ways to provide greater access to loans used by individuals to purchase mobile manufactured homes for the purpose of promoting homeownership. So very simple. So I guess what we'll do now is I'll go around and I'll call out folks on my screen to just sort of introduce yourself. Talk a little bit about the organization or the agency that you represent. And once we go through introductions, we'll just kind of dive into just free-form general discussion. So first, I'd like to introduce my Senate co-chair of the Banking Committee, Senator Patricia Billie Miller. Good afternoon, Senator.
Thank you. Thank you, Mr. Chair. Welcome, everyone. We appreciate you taking the time because I know you're all busy. And so just taking the time out of your busy schedules to work on this initiative, because I think is very important in light of there being a shortage of housing that people can afford, just home ownership, rentals, home ownership as well. I'm going to ask you, Mr. Chair, to call Representative Santiago last to introduce herself, because I would like her, since it was her bill, just see if she wants to comment. In fact, I asked her to comment if she would just talk about the impetus and why she thought that this bill was very important at this time. Thank you.
Okay. Thank you, Senator. Okay, I'm just going to go around in the order that everyone's appearing on my screen. Lisa Hensley from CHFA. Hi, Lisa.
Hi, everyone. Nice to meet you. I am the Managing Director of Homeownership Programs for Connecticut Housing Finance Authority. And we do work with homeownership, and we also work with counseling, and we also work with foreclosure prevention. So those are some of the things that we do in my department. Nice to meet you all.
Great. Thanks, Lisa. Art Corey, Connecticut Bankers Association.
Thanks, Representative. Art Corey, General Counsel, Connecticut Bankers Association. We represent the banking industry here in Connecticut. anything from small mutual community banks to the largest national banks that have a presence here.
Thanks, Art. Bruce Adams, the Credit Union League.
Thank you, Representative. Yes, I'm Bruce Adams. I'm the president of the Credit Union League of Connecticut, and I'm happy to be a part of this group and to see you all and prepare for seeing most of you in person in February.
Thanks, Bruce. Our Commissioner of the Department of Housing, Ciela Mosquera Bruno. Commissioner.
Hi, thank you, Representative Ciela Mosquera Bruno, the Commissioner for the Department of Housing. I'm also the Board Chair of the Connecticut Housing Finance Authority, and I deal with all issues related to housing, from production, preservation, promoting, advocating, and also we provide financing to the homeless population. We also do some of the programs for homeownership, working in collaboration with CHFA.
Great, thank you, Commissioner. Dave Dellary. Did I pronounce that correctly, Dave?
Pretty close to Lori.
Dellary.
Thank you, Senator. My name is Dave Dellary. I'm a resident of the Sun Community Cedar Springs Mobile Home Park in Southington. I'm also a member of the DCP Mobile Manufactured Home Advisory Council, and I am president of the Connecticut Mobile Manufactured Homeowners Alliance, which is a statewide organization recognized in statutes as advocating for the rights of mobile home park residents.
Thank you. Our Commissioner of the Department of Banking, George Perez.
Good afternoon, everybody. I am the Commissioner of the Department of Banking. I also serve on the board of CHFA, and I have a long history of serving in many nonprofits that have to do with housing. Entities like Habitat for Humanity in New Haven, Hill Development, and other nonprofits that have done housing. Prior to being a banking commission, I was a lender, a commercial lender, and I specialized in CRA lending, which was primarily, residential homes. And I look forward to seeing, to be a positive contributor to this discussion.
Thank you, Commissioner. And I also see Matt Smith from the Department of Banking has logged in. You want to say hi, Matt?
Sure. Hi, everyone. Matt Smith, Department of Banking. I don't know why my camera's not on. Anyway, just happy to be here and to lend any support, with the help of the Commissioner. Thanks.
And then I'd also like to introduce our legislative staff. We have Justin Kaiser. Say hi, Justin, the relatively new clerk of the Banks Committee.
Hi, everyone.
And also joining us is Will Cromwell from the House Democrats office. All right. And then finally, last but not least, Senator already gave the introduction, the build up to Representative Santiago, who, as the senator mentioned, proposed the initial bill, which was consolidated in 6668, and became the enabling legislation for this work group. Hi, Representative.
Hi, Representative Doucette. And first of all, I want to thank everyone for being here and hopefully look at ways that we can do more affordable housing in the state of Connecticut with manufactured housing. So it was an idea that came up. I read a lot of articles in the news and papers, and I get a lot of information from the HUD Exchange. And I was just looking at ways that we can make it more productive, because it seems that affordable housing is also being concentrated in the bigger cities. And sometimes in the smaller towns and cities, affordable housing is difficult to get. And that's also looking years ahead on getting affordable and marketable housing. So I put this bill together and just to see if there was something that can come out of it. In doing some of the reading, I found out that a lot of banks don't help finance manufactured homes or mobile homes or whatever you want to call them. And there was and when I did learn that Chaffa did have a program, which I never knew about, that they do help with some of the finance when I looked at their website. But I thought that this would be a way to learn and understand how manufactured housing can assist in addressing affordable housing needs. That's the bottom line. And it's looking at first-time homeowners, a shorter, starter homes for younger families, home ownership. Home ownership is less expensive. That's what I was looking for. And in what I've learned since the bill was proposed, and I was always looking at the HUD exchange because I'm always in there also, and I get a lot of emails from them, that the federal government is also looking at manufactured housing commitment to residents and homeowners. And there is $225 million that is going to be coming out towards the end of this year for the states to apply for manufactured housing. But that's also in conjunction with working with the local and the state governments and not changing the housing codes, but to go, not to bring any ruckus to the cities and towns about manufactured homes. And looking at the Section 8 program, and looking at ways that vouchers are given out for housing and the shortage of housing, because we have a large homeless population. And these are working families also that are becoming homeless. It's not just people with mental health issues, with drug addiction, coming out of jail. As you know, there's a whole list of them, but also that working families are having a difficult time finding apartments that are affordable. And that's one of the reasons why I brought up this bill. And in looking at, one of the things that we do have to look at is looking at what the challenges are in the state of Connecticut, recent innovations with manufactured housing. So there is a webinar series in the HUD Exchange that I would suggest that many of you can look at once you sign up. And this was even and I'm going to give you her name, Mariam McFadden, who is the Principal Deputy Assistant Secretary for Community Planning and Development, that looked this as a way to address a shortage of 3.8 million homes nationwide. And also using CDBG money, which I know people become very sticklers with CDBG and they don't want to, but I believe that not the CDBG money that's being given out now, but also that CDBG money can be used to support the infrastructure and the quality of the homes. And it doesn't sacrifice the quality of housing that we look at. It's just making it easier to finance manufactured housing units and support the development and preservation of manufactured housing communities. So I'm just reading some of my notes of what I got through the webinar that I sat through. So I'm just really excited that this is something that we can look into in the next couple of years, and that people are really more excited about home ownership and getting people off the streets and getting working families to really afford affordable housing.
Thank you, Representative, and thank you for doing that research and bringing this forward. I found it intriguing, as many of you know, in my day job, in my real estate practice, I do a lot of closings, as Representative Santiago was proposing this bill, I had a scenario actually this spring where I was working with a potential home buyer who was working with an agent, found a mobile manufactured home, and then set out trying to find financing for it, and ended up getting stuck. Initially, they were working with a lender who believed that they could do it, and then found that the park was not within the exact guidelines and parameters for their underwriting standards. And come to find out that the options were much more limited than that home buyer had expected, and they ended up moving on and finding another home. But it brings me to my other point that you brought up again, Representative Santiago, that in this time where we have a genuine housing crisis, especially in the number of affordable units, and most of these mobile manufactured homes are going to fall within, I think, the definition one way or another of affordable housing. I think this is a great conversation to have, to the extent that we can help facilitate or break down any barriers to creating and getting more homeowners who are in that segment of the market into a home of their own. I think that's a conversation we should be having. So I want to, kind of leave this open-ended and just have a general discussion. I think it might be helpful first to, for everyone to talk within the realm of their expertise as to how they see the market for financing mobile manufactured housing. I think, Dave, maybe I'll call on you first to kind of give from your perspective. I guess, how many mobile manufactured housing units do you think we have in the state? And what do you see as somebody who is working with the mobile home parks and as what the market for financing for buyers of mobile manufactured homes is? Oh, Dave, you're on mute.
Unmute.
There you
hear me
go.
now?
Yep.
Okay. To answer the first part of your question, my understanding of the number of mobile home park pad sites in Connecticut is somewhere just north of 10,000. That information comes from DCP. It might be a little dated, but there hasn't been a lot of new construction of mobile home parks, with the exception of one in Oxford in the last few years, which came in through 830G, and then a new one out in I think it's Montville, somewhere near one of the casinos. It's been under construction for a number of years. First started by Jensen's, and now being operated by Sun Communities. I agree that the financing is limited. I did talk to the management here. They have a couple of lenders, and they're dealing primarily with new construction. They do have 3 lenders that they generally work with. I talked with a representative of my park as part of a DCP advisory council meeting last week. Which, by the way, you should probably have somebody from the parks on your working group. I would recommend that. And I can give you a name. So those 3 lenders are First Credit, Priority Mortgage, and Sterling Associates. Those are the names that I got. We are aware. I mean, we are certainly aware of the opportunities that Chafa has now has in place for a couple of years. And unfortunately, maybe the people that are here from Chafa can confirm that there hasn't been a lot of, for some reason, there's not been a lot of pull through to the closings that we were hoping that they expected. I was told that is a result of a couple things. That a lot of the residents that are buying homes, well, first of all, a lot of people my age that are downsizing are paying cash. For other people that are trying to buy in some of the age, I'm in an age restricted community. Some of the people that are in non-age restricted communities, they face typical lending challenges of high debt to income ratios, and then that brings PMI in, right? So that's a potential obstacle. But I will say that maybe some of the people that are here representing the banking industry or the credit unions could answer this question. How many of them how many of your members are actually actively will lend to in a mobile home park? And because they're supposed to be, my understanding is they're supposed to have been, especially the newer ones, are supposed to be treated as single family homes under state law. And, why are those the local lenders not participating in them? Because they don't move. You rarely see a mobile home moved unless it's aged out and crushed and replaced by a new one. So that was a question I've been wondering for a while, and I don't know about why the Chaffa program hasn't been more popular, because we were very happy to see that. I myself helped promote that by helping the Chaffa people get the addresses of every mobile home pad site in the state from the local tax assessor, which I'm a certified tax assessor and real estate appraiser. So, I'm at a loss to explain why that hasn't happened. One of my residents here in my park, there's an underwriting guideline that it has to be a minimum, I forget what it was, a minimum loan amount, and she had already paid her loan down to below that, so that's why she wasn't eligible. So that's my input from the residents' perspective.
Okay. That might be a good segue. Lisa, do you want to comment on the CHFA program, and if you have any data points on what's been happening with it in the recent years?
Sure. And I agree, it has not been as successful as we would hope. And even the refinance program, which is at 1%, just hasn't had the reception that we had hoped for. I will be completely honest. I did talk to the people who manage the program for us. They have said that they feel that one of the biggest obstacles is the down payment or the equity requirement. So I am looking at our program and looking at the legislation to see if there are changes that can be made and what we could do to maybe help improve that. They said the other issue is, of course, the debt to income ratio. And so that's a big deal. I mean, we set ours, I believe, at 50% of gross income. So, but I do think that that's another barrier for trying to take advantage of our programs.
What is the loan to value or the equity requirement?
It's 20%.
Yeah.
And if you don't own the land and it's going onto a lot that you rent, then you do. It's very hard to have 20% equity in a mobile home, manufactured home.
Right.
That's what I had heard as well.
Yeah. And the transaction or the potential transaction I mentioned, the home buyer was initially, thinking he was going to be able to go through and get FHA financing, which I don't even know is that possible. I know our program doesn't follow those same underwriting guidelines, but is that possible? Is there anywhere that you're aware of, Lisa, where they do have the lower equity or higher loan to value?
I know that when you're purchasing the lot and the home together, Fannie and Freddie will lend on those, FHA will lend on those. If you're renting the land, if it's a lot rent situation, it's really considered more like personal property, a chattel. So it's not quite the same.
Mm-hmm.
But yes, Fannie and Freddie will do 5% down. And I even was looking, I did do a little research beforehand, just to see what else is out there. And I did see one bank that will do 5% down on these loans. I think their debt to income ratio is set at 48%, but the interest rates are higher, you see, and the term is based on the amount. So if it's under 40, it's 20 or 15 year, I can't remember exactly, but so I wanted to kind of compare ours to that and see if there's room for improvement to try to make our program work better for the people that we're here to serve.
Mm-hmm. Dave, would you say that most of the parks in Connecticut are leased pad sites?
I'm sorry, was that addressed to me?
Yeah.
Yeah,
most
yes, I would say that that's primarily true. I mean, yeah, if you have, as far as the GSE lending goes, they've been doing lending to individuals who buy a piece of land and put a mobile home on it for a long time. It is an obstacle for people in parks, and I guess we're taxed as real estate. It's a unique situation in that it has the opportunity for people to get in and buy a home at a much lower investment, but you do have to look at it from the lender's point of view, that it's still considered chattel, but the modern ones, and we're going to have the DCP Advisory Council is working on having a program to bring state legislators, the regulatory people, out to some of the newer parks later this year, in spring of next year, to see what the new ones are like. I mean, you can come to my park and see that the newer ones are built to, I mean, they're nice homes, and when they're set up on a pad site, they're not moving, and the wheels are taken off, and I think that would take away some of the concern that I think originated from when mobile homes first became an option back after World War II, and when people literally did jack them up and move them around. That's not true anymore. And I don't know how that gets addressed, but I think that might, help free up some of the capital that would otherwise be available to, single family homes, stick-built homes.
Bruce and Art, I want to maybe turn to you guys to comment a little bit on what you're seeing in your industry from your members, if there are any who are active in this market or have had any involvement in the past.
Art, can I jump in with a question first? So this is a practical question I really honestly don't know the answer to, which goes against all of my training in law school. But what happens in the case of the homes that you're describing, Dave, where there's a default on the loan? How does the lender deal with the real estate owner in terms of, let's say, foreclosing? I mean, can they move the house if they have to?
So I've been living here since 2013, 2014. The only time, this is not really addressing your question yet, but the only time I've seen a mobile home get moved is when the aged occupant passes away. And once or twice, I saw some company from Maine come in, uncover the skirting, disconnect the utilities, and it was out in the street in a couple hours, and they hauled it to Maine to be a hunting cabin. That's the only time, or they crush them and just scrap them and haul them away in a dumpster and put a new one in. So, but you would be better off talking to the park owners on that. But I do know that one of their issues is not so much when default on a loan, but non-payment of lot rent for one reason or another, which really doesn't happen too often, but it does. And then they get tangled up in, oftentimes it's a probate situation that can go on for a number of years. So it's with the newer homes, I don't think I haven't heard of somebody defaulting on a newer home.
And that was the other side of the coin of the question I asked, is what happens when the lot lease isn't paid, and how does, because from the lender's perspective, we've got a messy asset, that is securing the loan we give, and at least that's what I've heard from my folks that do any of this, is that they feel nervous about underwriting in that space because they don't feel like they have adequate security for the loan they're giving.
I think that's a fair point, and I think the only way around it would be to subordinate the lease, or to have some sort of agreement with the landowner or the park owner, between the lender, like an SNDA type of situation, you could do that, and and basically an agreement that says that if we have to foreclose on this mobile home, that you'll recognize us, landlord, as the new tenant. You know, and in a sense, yeah, I mean, it would have the lot rent would have priority in the same way real estate taxes have some priority. So but the lender could step in and pay the real estate taxes in the same way the lender could theoretically step in and pay the lot rent, and you know, protect its asset there. So I think it could be done, and I imagine it is in some cases of
I can't, I think, I don't want to speak for the ownership. They have issues that I'm sure are that I don't know about, but my gut reaction is that if a bank wanted to step in a situation where their land rent wasn't getting paid, they'd probably be happy about it. Because if you're not paying your mortgage, you're probably not paying your land rent either.
Right.
It just makes, yeah, go ahead.
Yeah, Bruce, I was going to ask, do you have any members that have said that they're in this space, or you know,
yeah,
have been or considering it or anything like that?
So there's we tried to pull a report, and we got a report of 3 that have done it, and for a total of, since 2020, maybe 6 loans. It's sort of hard to read this report. And then we did a survey of our members, and didn't get a huge response, but of the about 10 or 8 that did respond, none of them are actually doing it. But the comments were that we offered it for a while, but had no demand. There are unique challenges and risks, although we'd like to add another product, you know, to be able to better serve our members. Determining appropriate risk model is a very delicate thing in this kind of asset. And then, yeah, 1, 2, 3 others say there's no interest, but they'd like to be able to offer it safely.
Okay. Or how about on the bank side?
Yeah, we reached out to sort of a cross section of our banks, 12 of them, heard back from 11. 2 of those 11 have done mobile manufactured home loans. 1 has less than 5, and I think more just because someone approached them. The other one is much more active than that, although in both cases they will only lend to a purchase for a mobile manufactured home where the mobile homeowner owns the land underneath as well. And for the reasons that Bruce had and your representative had talked about, that you know, the risks associated with not owning the land and the complications with landlords and whatnot. But some of the other reasons, in addition to those that Bruce mentioned, you know, some banks view it or all the banks that I spoke with view it as a specialized lending product, and that if there's not a large demand in your market area, it doesn't make sense to have, you know, an originator, an underwriter, and a loan processor that know that industry and the particulars, unique aspects of that. You really, you know, it's almost like condo lending. You really need to know what you're doing in that space. So, you know, a number of the lenders or the banks that said, no, we don't offer that. The comment was, you know, we don't really have that demand. Nobody's really asked us for that. They don't maybe have parks in their area, and therefore they don't have that. They haven't put the resources into having the staff required to do that. The one bank that is doing it, I think there were some parks originally in their market area. So they found that, you know, small niche business there. And then because they have that expertise, they have the people on board that can do that, they do it statewide now. and they've even done it in other states. This is a state chartered community bank. So I would guess that if we pulled all of our members, again, we just did a cross section between national and state charter, size, and whether they're a public company or a mutual. So I guess if we expanded that out to everybody, we wouldn't probably find more than maybe one or two more that do this. It's just some of the other things that they mentioned. Appraisals, the one that does do this finds it hard to find appraisers that will do this and are willing to do it. I don't know why that is. The sense from this bank also was that municipalities may not be approving a lot of new parks right now, and that might lead to sort of a demand issue, if you will. But I'd say the main issues were the specialized nature of the lending, having the right people on board, and then also not owning the land, having leased land underneath, and the complications that might come from foreclosure, as you mentioned before. I also did ask, and I guess this is maybe a question for Lisa. I think, Lisa, you guys work with Capital for Change on the mobile home lending program, and I asked whether any of our banks were partnering with them, and they all said that they were not. So I don't know how that program works. If that's where the funding is, that come from lenders, something that banks
No, actually, they take the applications directly themselves and process them and underwrite them, and then and service them on our behalf. So they do all of the work there. One other thing, though, as we were talking, I thought about too, is that I believe our program is only for state-owned mobile home parks. And so I need to double check that as well, but I think that was one of the other things written into our program, and that might be might be something we control, might be something that's legislative. So we might want to look at that too.
State of Connecticut owned?
Yeah, that's what I was told, but I haven't been able to do a lot of research.
I don't think we own any.
Okay.
But we
or maybe licensed.
We look at it, and we look at the program. I have to get familiar with it too. So with Lisa, we'll talk about it, and we'll go over it. Yeah.
And if I could underscore Art's comments too, the human resource cost is really pretty high in adding this business line. And when you scope the market, it's a big cost, to get up in this business that may, very well be saturated, or at least not scalable to a point where, you're justifying hiring, 1.5 to 2 full-time employees to do this kind of work. That's top of my head. I don't want to hold out those numbers to be accurate, but these are expert jobs that require expensive training, and I don't know how scalable or scopable this market is.
And I think that's one of the reasons why we partner with C4C, so that because we don't have that much demand, and it can be because of how it's not that flexible, as you will. But we'll take a look at some of the things that we may be able to change. But I don't see that many mobile homes development in the state, which is what the demand will be for those existing mobile homes when people want to sell it, and there will be a new homeowner. But maybe we have to, I think we do have the number of mobile homes that we have here in the state. We can get that number too.
Mm-hmm.
Senator Miller.
Thank you, Mr. Chair. I just had a quick question for Art. You said that you had surveyed, I guess you had 11 responses from your survey. How many loans were there? I missed that number.
I didn't ask, Senator. I'm getting a little bit of an echo there. I guess it's okay now.
Sorry.
No, I think I'm okay now. The one bank that did very few had less than 5. I didn't ask the larger bank how many they had, but it sounded like it was a fairly robust program. I mean,
Mhm.
for the scale of the market in Connecticut, and like I said, they're all around Connecticut and even outside of Connecticut. But I think, I would guess again, they're like one of the only few banks. I think the rest are what you'd call non-bank lenders, finance companies that I think what I heard was that, sellers of mobile homes, are often associated with finance companies.
Yep.
I think a lot of them are non-bank finance companies, and that doesn't mean anything for when a private owner is selling to another owner, but at least for new purchases, that's what you're seeing. So I don't know the answer to the question, Senator, in terms of how many, but they seem to be a pretty active lender throughout the state.
All right, thank you.
And maybe
somebody-
that's a good segue. Commissioner Perez, do you guys have any information on the non-bank lenders who might be active in the state in this market?
Did I lose you? I didn't hear your the last.
Okay, yeah, I'm asking about if you guys have any information on non-bank lenders who are active in this market, how many approximately in the state, and what kind of business they're doing.
No, we do not keep track of that. We're not aware of any. I mean, I know, for instance, I looked at Rocket Mortgage, and they do have one of the categories when you apply. They have single family home, condos, so on. One of the category is mobile homes, but I did not, go into it. I did have Art and the credit union, with the help of the credit union league. We did do a survey of some of the banks and the credit unions, and there are credit unions that are doing mobile homes. There are banks that are doing it also. Not many. That primarily is more of a response to particular niche in the areas that they have branches. So if they don't have a branch in that area, they don't particularly provide it. But if they have mobile homes in an area where they have a branch or a presence, they are. But most of them would like you to own the land too, which is not typically, I'm not saying that there are not some out there like that, but not typical.
Yeah. The lenders, though, that Dave mentioned at the beginning, I jotted down a few names: First Credit, Sterling, but those would be licensees of DOB, right? But we just don't know exactly what market they're in. They're going to be licensed as mortgage lenders, but we probably don't have all the data on a granular level.
No, we could do that. We could do that research. I mean, we could do that research, especially if you share that list with us. But I mean, I could go back to Carmine's area, which is one of those mortgages, and ask, which I did ask, and they say we're not aware. This is not a big, this is not an issue that we've got any complaints on or requests.
Okay. Commissioner Mascara-Bruno. I'm sorry, Senator Miller.
No, my hand, I'm sorry. I believe it was, I don't know, I guess it was Art, or was it Dave? It was either Bruce or Art. They brought up a very interesting point, and what may be a challenge when they talked about the municipal, I call them munis, the municipals, that 830G, because I believe, Dave, you had mentioned Oxford, that was an 830G development, and I think that's going to be a challenge, because a lot of, you're not going to find mobile parks in this. Oh, sorry. Can you hold on for a second, please?
Sure. Commissioner Mascara-Bruno, you had mentioned the number of manufactured mobile homes. I don't know if you have data on that. And then I guess at the outset, I had sort of the question is what are we considering or defining as a mobile manufactured home, either in statute or otherwise? Is this the traditional sort of what we think of it as the double wide, or is it larger? Is it encompassing more sort of modular construction and stuff like that? On the banking committee, we don't look at this, obviously. I'm sure that Housing Committee and some other groups around have had, discussions that drill down on this a little more. But Commissioner, you're on mute.
Thank you. On the data, we do have some data of how many mobile parks, because the CHFA and DOH participate in the council of the mobile park. So we'll give you that data for the next meeting. The definition is, it can be, so mobile home used to be like you could move your house to another place, right? And now a mobile home and a factory home, the new way is that you have a foundation and you bring the home and you install it, but it's not mobile. In Milford, there is one that I visited, and it's a foundation, and then the box, if you will, is coming from a manufacturing company and then installed. So those are depends of which park and how they determine in the way that they're building. So I would consider modular homes is manufacturing homes, and they consider to be mobile in the mobile park, but not really mobile. They cannot be moved.
Right. So yeah, I mean, I think that's, technology advancing, and I've heard of lots of different types of construction. I mean, this could be an expanding segment of the market. And then Senator Miller, bring you back to, you were talking about 830G. I think it's worth mentioning, zoning in general being, a factor in this, right? As to where, you can even build these parks, and that has an effect on the market and the availability of this type of housing. Will.
I just want to note that Connecticut, we have a surprisingly strong code on municipalities aren't allowed to discriminate against mobile manufactured homes if they're beyond. They are not allowed to treat them differently than they would treat a single family home or a multifamily home. This typically only really is relevant for owner occupied, like when you own the lot, because if it's a mobile home park and if it's a single family area, then they can say, well, that's not a single family lot, so they can deny it. But if they own the lot, they're allowed to install a manufactured home if they're allowed to build a single family home. And also HUD has a specific definition of a mobile home, and that's typically what we use in statute to define what a mobile manufactured home is. And that definition, their standards are currently being revised.
Okay. So I get, go ahead.
Jason, for banks, in my days when I was a banker, if it was a mobile home built in a land that the person owned, or if it was part of a larger set of units, like a condominium, there was really no distinction. Versus if you don't own the land, versus if you're able to move it, the moving part and not owning the land is what creates the challenge for the financing part, not the fact that it's manufacturing. Now the appraisal may be different, right? But that's not a financing per se, right? The value is the value. But as a financing tool, our property, may know more because, he was working with us and doing that survey. But when it's a true mobile home in a mobile park that you don't own the land, that you can move it, that's where we do run into some issues where people say, financial institutions say we will only finance it if you own the land, right? And then we only do it if you're in our assessment area.
Can I ask a question for the people in the banking part? There's been talk over the years of, we typically have a 1-year lease with the right to renew, unless there's a reason you can't, you're not obeying the rules for one reason or another. So there's been talk over the years of mandating some sort of longer term lease, and if that was in place, would that make any difference to the banking industry as far as making funds more available for purchase and refi for mobile home park units?
I think it might. and I had a conversation in the conversation I had with the one bank that's doing more of this, he seemed to allude to that. So I can round back with him on that. He's really knowledgeable about this stuff. I can certainly round back with him and ask him that, but to confirm that. But I think that's correct, Dave, that would alleviate some of the pressure. I'll also note that, not related to that, Dave, but I just want to make sure I get it out there before I forget. This one bank will only do loans for 15 years on mobile home loans, and he seemed to indicate that 15 years might, this isn't like lending to the purchase of a single family house that can be around for a couple hundred years, I guess. That these things have a shorter life than single family construction, so that they're only willing to go 15 years. Although he said that some of the newer manufacturing is much better, and he referenced actually a specific park where there are mobile manufactured homes that are more like modular homes. That they still have the trailer frame underneath, but they look much more, and they're on single individual lots where you may have, and that may be where the lease conversation came out. We have a little bit maybe longer lease, so it's kind of those are some other issues I'm just mentioning that are not complications or that keep banks out of it, but other factors that I think play into our conversation here about the availability of lending. And I don't know if 15 years is something that is unattractive to some mobile home buyers, if they would want something more, a lengthier time than that to get a lower payment. But they see that as a risk factor, if you will, the length of the loan.
I would also add, Dave, that I think there's probably a number of terms that would impact the lender's decisioning. One being, what the landlord's remedy is in the case of non-payment. Not just the term of the lease, but what the available remedies are and things like that. I mean, perhaps over the course of this working group, we can tease some of those additional issues or opportunities out.
Yeah, I think from alluding to an earlier conversation, I mean, the park owners have, pretty strong way to enforce payment of their fees. Then it becomes who's in line first if they don't pay the bank. So I'm sure I understand how that would impact a lending decision, but as far as the 15-year thing, if there was more availability of funds at competitive rates for single family homes, I mean, that would be a high class problem if you had to deal with the decision whether to make a 15-year loan or not. I'd like to see some way to address the overall availability of funds for mobile home park purchase at rates competitive to single family homes, because Art, you're right. I mean, I can bring anybody along who's interested. The newer homes, once you step, I mean, except for the skirting on the outside, once you step in a home, you're not going to know it any different from a modular home that's put in a subdivision someplace. That comes back to the big question of zoning restrictions, which is that's a whole different argument. And I think there's you have by right to put a mobile home park on a piece of land that a mobile home on a piece of land that you own. But I think there's very few, as an appraiser, I think there's very few communities across the state of Connecticut that we'd get a fight tooth and nail to put a new mobile home park in, despite the fact that everybody's looking for affordable housing. So at least they say they are.
From my past experience, a 15-year is an issue, because especially for a first-time home buyer that doesn't have a lot of money, 30-year mortgage may make the difference for that person to qualify from a debt-to-income ratio.
I think the one that I did find does have a term up to like 25 years, which is probably a lot more feasible.
Right. But I would think that we all, to be intellectually honest, the longer the term, the more likely to help more people with less means or less resources to be able to qualify and own a home, whether it's mobile or not, or, or they're more traditional. The same way with the lease. I mean, banks and financial institutions lend to landlords all the time. And many of those leases are 1-year leases. So they're used to lending to residential developments that have 1-year leases. The real issue is that for whatever reason, they feel it's more riskier to lend to mobile homes because either they may not last as long, which they may have changed because of manufacturing changes, or because you don't own the land.
The construction thing is a throwback. Like I said, the standards. We have a couple of new homes in my community. I can look out the window and see them. And I've been to modular home factories to tour them. And their standards of construction are in my opinion, are every bit as good as a stick-built home.
Oh, do you agree?
Yeah, and so I agree, George, that the ownership of the land continues to be a problem, but I also think that's an anachronism, because these homes, there's just it's prohibitive to move them, and B, there's no place to put them anyway. And if a lender was going to take it over, I think it would be a risk, the same risk as any other foreclosure, but there's a market for them. Right?
Yeah, but as an appraiser, that one of the things they look at is, if we had to take over that particular property, what's the likelihood of being able to sell it fast, and sell it for a market rate, right? So there's a perception, if not reality, because sometimes perception becomes reality, is there a big market for mobile homes, right? True mobile homes, not modular homes. And they take that into account. Nothing I'm saying is necessarily what I believe, is what I'm trying to do is relay information that I received, because as a lender, I lend to development complex that it was 100% modular homes. And to be honest with you, once you got there, you can tell the difference. They had insulation, they look the same, you would not know if somebody didn't tell you they were modular homes, or if you didn't see the construction go up, which is different.
So Dave, I think in light of that discussion, a question that I have, do you think that park owners or landowners or some of these larger park operators would have a problem with a provision that basically required that they, enter into some kind of subordination agreement with a lender who's given a first mortgage?
That's why we need a member of the park owners organization on this committee. I don't want to speak for them, and I'm not a lawyer. But it hasn't happened before. I just off the top of my head, I would think that if it was something that they thought would increase the value of their investment in the park, they'd be for it. But maybe it does not. So I'd rather have you. I can give you a contact and have you talk directly to somebody from one of the parks if you'd like.
Yeah, I think that's a good idea. Yeah, I think that's a good idea.
I'll email you. I'll email you something after the meeting that you can reach out to one of them. It's a pretty knowledgeable, very knowledgeable.
I had a question for Dave. Dave, I'm sorry, are you finished?
Okay.
Jason?
Yes.
Representative Sapp?
Yep.
So, I was going to ask him if he could send us that information as well. Dave, I have a question. Can you walk us through the leasing process for someone that will come to your park, for instance? Like, how does that work? I have a mobile home there, and I have my mobile home on their pad. So I pay them a fee?
Yes. So it's land rent. So if I understand your question correctly, like when you buy the home, either from the park, if it's new generally, or from another property owner. And just like they vet you, just like a tenant would similar to what a tenant would in an apartment building. They want to know your credit background. And you agree to abide by the rules and regulations of the community. There are some fairly strong regulations that keep you from being evicted without good cause, because it's your investment. I don't want to get into a whole bigger can of worms about a lot of issues that go on in mobile home parks, because I don't think that we want to kind of limit it to the financing part. But anybody who's willing to talk about, the issues of that are driving land rents up in the state, and therefore that impacts the value of every time the land rent increases, it increases the value of the park, but it has a downward pressure on the value of the home. So, but that's a discussion for another venue. But it's a similar process to renting an apartment. You just have to it's primarily credit driven, and that you keep your place, you agree to keep your place looking in our community looking halfway decent, and obey by the rules of the community. I wish they would enforce the speeding of residents a little more, but that's a small thing. So I don't know if that answers your question.
Senator, you muted.
I just need to know how something works from A to Z. So you can't take me to P and expect me to know how things work. My brain doesn't function that way. So I was just wondering how the leasing part works. If we're talking to the park owners about changing the lease, I just need to know what that looks like. When you have a lease with them and you pay so it's like it's like a common charge, almost like a monthly maintenance fee. You would pay.
It's akin to a homeowners association in a condominium, say, but you're paying primarily for your land rent reasons.
Gotcha.
So they include, in my community, it includes water supplied from the city water system, city sewer. They have garbage collection like in a condominium. They plow the snow, and you're paying the property taxes. A lot of people say, "Oh, you don't pay property taxes." Well, we pay the property taxes on the land through our land rent or our homeowners association charge every month. So it's very akin to a condominium complex. Yes.
Okay. All right. Thank you.
All right. So,
Representative Doucette.
Yeah, go ahead.
I'm sorry to interrupt. I just to key off of Dave's question and Senator's question. Just so I understand, if I'm in a condo, isn't it the condo association that pays the tax? They just collect monies through the HOA fee.
Well, the HOA owns the plot of land, right? So you're going to be paying your taxes as an individual on your common interest part, which is your unit. That'll be your real estate tax for your improvement, and then the association charges you a percentage of the fee for the land, and they put that in your bill.
Yeah, I think it depends. Most condos, the association doesn't have a tax bill. All the taxes are paid by the unit owners, but it could be that way, that there's common elements, there's the tennis court or there's whatever, that is a common element that the association actually technically paying the taxes on. So you can go, you could go either way. And then, the mobile homes also have their own tax bill, but it's technically taxed as personal property.
Well, and I was referring to the land, and I should have made that clear. But I guess I was wondering if the agreements themselves refer to passing the land tax through to the unit owners.
You mean the lease agreement?
Or the lease agreement, yeah.
No, it does not. That's an interesting point. But we're not paying it. We don't get a tax bill for the land. We get a tax bill actually it's a real estate tax. But like in a condominium, it's just I liken it to a condominium association, because an appraiser, when you go and look at the tax bill from a community, there's an improvements line, a land line, and a total.
Yeah.
But there's no land line in your tax bill from a condominium community, and we don't get one from the assessor for a mobile home for our mobile homes. So I tell people, yeah, you're paying your land because as an assessor and an appraiser, I have worked on valuation of mobile home parks. And so they determine the value of the park by the income stream. And it's an NOI based, you cap the NOI and come up with a number, take 70% of it and apply the mill rate. So, and then they send that bill, in our case, to Sun Communities here in Southington. I'm assuming that it's not demarcated or it's a line item or anything, but you get a bill, and I assume it's broken down. And you divide how many communities here are, and residents here, 105 or something, and they divide it by 105, and then add the water charges and their sewer bills, and send us a bill.
Yeah. So as a legal matter, the association or whoever it is the taxpayer on the land.
The taxpayer on the land is the owner of the park.
The park owner or the condo association. Okay.
Yes.
Okay.
Bruce, you raise an interesting point that maybe we even ask the assessors association statewide if there's anybody who does it a little differently. It sounds like it to me like that would be a question for an assessor. If it looks like a condo, maybe they decide they want to assess it like a condo and assess the unit owners. I mean, I don't know. It's a good question.
And I don't want to take more worms out of the can. I'm just trying to, like you, Senator Billy Miller, I'm trying to like go from A to Z and understand the whole thing, right? So I needed to clear that up in my mind.
So I think, yeah, it's about, I didn't want to keep everybody all afternoon. I think this is a great discussion. I think that maybe the next thing to do would be to kind of talk about next steps and possible legislative proposals. Obviously, that's why we're here. It's it may be that this is a longer term discussion, but there may be some lower hanging fruit or ideas that could become legislative proposals for the banking committee to consider next session, which I think most of you know starts up right at the beginning of February. Representative Santiago. Yeah.
Yeah, I have a new phone, so I can't find the hand yet. So thank you. So I failed to mention in the beginning that the funding that's coming through HUD for manufactured homes is also including tribal land. So it's not only for local and state housing, but also for tribal lands. And there is a big interest, especially out west, as you know, because of the tribal lands. So I was just bringing that out there. I listened to a lot of the barriers. I think we would have to come up with what are the barriers and what are the options, what are the opportunities, because even though there hasn't been much demand, it doesn't mean that in the future there might not be much demand. It might be that because there hasn't been enough marketing or media out there or packaging or maybe funding directly from HUD now to subsidize some kind of down payment where it's a lot easier for people, folks to buy these manufactured homes. I don't know. I heard a lot of good information. I heard a lot of changes that might have to be made, but I'd be interested also to listen to the organization that Mr. Dave talked about with the Park Association and see if they might be able to answer a lot of our questions because they're the ones that are renting. I'm sure that even if there is no demand, if sometimes if a mobile home, for whatever reason, if somebody moves down south or it's the person passes, I'm sure that they're being picked up quickly. And they're being sold quickly. I don't know. It all depends on how the interest rates and all that is how the market is, and how do you how do you market your product? But yeah, I heard a lot of good information, so I'm hoping that we'll have another meeting soon, and also give the opportunity for people to look at the Introduction to Manufactured Housing that is on the HUD website and the HUD Exchange, and really look at the slides that I looked at and the different kind of housing that's out there, and maybe look at something that we can do for affordable housing. My thing is affordable housing, and this might be an avenue and an option and an opportunity that people should also have, and more marketing, more outreach into the community.
Mhm.
Thank you.
Great, thank you. Yeah, and that's a good segue. I was going to suggest that, you know, after we log off today, I think everyone is on the same email string. If folks have other follow-up information or data or questions that were asked that they might have some answers to and want to send them along, that would definitely be encouraged. So I would think that, yes, Senator Miller.
I'm sorry, I just wanted to ask Representative Santiago if she could send us the link to the webinar. If you could email that to us if possible, the webinar from HUD's webinar.
I'll have Justin do that.
Okay.
Because I can't even find my chat in this new phone. So
okay, but at some point, yeah, all right.
Yeah.
So yeah, you can
and then that way he can
send it to all of us. That's fine.
Yeah.
I'll be interested.
And I want to
in watching.
thank. Yes, and it's an hour long, a lot of information. So again, I want to thank you and Jason, Representative Doucette, for having this meeting and at least having the conversation and looking at some type of options and opportunities for affordable housing.
And yeah, and I think in terms of next steps, I mean, we have, again, some questions that were asked that we maybe don't have precise answers to. We have some people identified that might be a good part of this discussion: DCP, the park owners, assessors. So those are folks that we could maybe reach out to. I would envision maybe this group having at least one more meeting. I mean, I think because of the calendar and session fast approaching, I could see this sort of segueing into a discussion during the legislative session within the Banks Committee process and a hearing on legislation and so forth. And I think this would set us up nicely, perhaps, to have a lot of that information out in this forum as a precursor to anything that we're doing during the session. So it could work pretty nicely in that respect. So I guess, yeah. So we'll send some possible dates out for a follow-up meeting in January. And I guess I would ask folks again to share information for any questions that have come up that they may have, and then also just to generally think about possible solutions to some of the problems identified, or possible legislation or ideas to expand access as we've discussed to this type of housing.
Great.
So with that, I will give a thumbs up as well. And
thank you, Representative Santiago
Thank
and Senator Doucette for taking up this issue. Really appreciate it.
sure. Okay. Well, thanks, everyone.
Thank you.
Happy
Thank you.
holidays.
Thank
Take care.
you.
You too.
Happy holiday.
You too.
Thank you.
Happy holidays.
Bye-bye.
Bye.
Happy holidays.
Happy holidays.